Tesla showing its sales are continuing to slide in Europe. Registration data in key European regions fell in March. And for the first quarter, the EV maker is seeing declines in sales from France, Sweden, Norway, Denmark, and the Netherlands. As for the United States, though, Ford reporting a decline in U.S. vehicle sales, even with continued growth with its F-Series truck. Meanwhile, GM reporting double-digit increase across all 4 of its brands. However, this all comes, of course, ahead of the looming auto tariffs expected to take effect this week on April 3rd. Let's start with Ford and GM, Al. Interested to get your take. What do you make of those numbers? What do you make of what they said? And also, what do you make of sort of the investor reaction?
Ford numbers were good.
Yeah.
General Motors numbers were good. A couple of things. Remember, these are wholesale. So, Ford truck sales jumped 25%, but that's to the dealers. Retail sales were up about 5%. Again, a very good result for Ford. General Motors, you saw 17. That's a very good result. If you look at the reactions, it doesn't matter. Because this is the first quarter, there's no tariffs. Some of that could be, pre-buying from the dealers, trying to get ahead of any price increases. And with
it doesn't matter. I mean, you mean it doesn't matter because investors are looking through that.
No.
They're looking right.
So if you look since the election, Ford is down about 5% coming into today. General Motors was down about 12%. Tariffs dominate. Nobody's cut their earnings estimates on Wall Street. They're just sort of waiting for guidance from the companies when they report first quarter results in a couple of weeks. So, these are nice results and it's good to see demand in Q1. But like to your earlier point, demand in Q1, what does it mean when prices go up, when tariffs start to impact? What do dealers do? What do incentives look like? So nobody knows. So it's like, hey, way to go, guys. You sold a lot of cars, but now we have to wait to see what the rest of the year looks like.
Can I dig into Ford for 1 second? We were talking off camera about this. The F-Series. What was it up like almost 25%?
24.5 or 25.
What was that, Al?
So again, wholesale versus retail.
Yeah.
So normal.
Is that just Americans love their trucks though? Is that what I'm seeing?
Oh, so F-Series still best-selling truck in America for 40 plus years. It actually lost its best-selling car title to the RAV4 last year. But that's okay.
Yeah.
We'll try and get it back. So, 15% of all the cars sold in America are sort of heavy-duty trucks.
Yeah.
Right. So Americans do love trucks, and this is what they're good at. This is what they make a lot of money on. So those cars are made in America, but still about 50%.
F-Series made in the U.S.
Yeah, but still 50% of the parts come from Canada, Mexico, and overseas. Right. So they still see an impact. It's the quarter-to-quarter fluctuations are about dealer inventories, what dealers think about tariffs and trying to get ahead of any price increases. So Americans love trucks. Excellent result for Ford. Excellent result for Q1 earnings. But these things will just sort of normalize.
Who's more exposed to these auto tariffs, Ford or GM?
GM.
Yeah.
So Tesla, 100% of the cars it sells in the U.S. are made in the U.S.
Yep.
Way to go. 80% Ford, 55% General Motors, a lot from Canada and Mexico. And then it sort of goes down from there in terms of the impact. So Ford is actually in a relatively good position. You see it in the stock price a little bit, but it's down less. So the mood is still terrible. It's just slightly less terrible at Ford.
Do you think, so you're an auto CEO, okay, my cost could be...
wish.
Yeah, right. Don't we all now?
Yeah.
But in this instance, here's my question. You think, okay, my costs are going up. Do I think, all right, I'm gonna eat the margin at least for a little bit as long as I can, or no, I pass it on to Al and Josh? Or do I think, I've been looking at these consumer sentiment surveys, Al and Josh don't seem very happy right now. I don't know if I can pass that along.
All excellent questions. Yeah. So you do a few things. One is the suppliers will try to jam the price increases down your throat, and you'll say, forget it.
Right.
So some of it will be borne by the suppliers. You won't call it a price increase, but the $1,000 cash back, the 0% APR for 36 months on qualifying lease, gone. So that's gone.
Adios, yeah.
That's worth $3,000 to $4,000 a car right now. So incentives go, and then you get down to the brass MSRP sticker price. Right now, the average transaction price for a car in the U.S. is about $48,000. It's a lot. We heard John Murphy, $10,000. That's on the imports. About half the cars are imported. So maybe on average you creep up to $50,000. Suppliers bear some of it. You bear some of it on your margin. You reduce incentives, but you're still going to see some price increases. And the bottom line is sort of everybody's miserable. You're miserable because you just paid $3,000 more for the car, no subsidized rate. I'm making less money selling the truck. My suppliers are unhappy with me, and this is the reality.
Okay, so near-term pain. But let me ask you this, because as a guy who covers this sector, why is Trump doing this? Trump is doing this because he wants to see, I want to encourage more domestic manufacturing, and that is for sure long-term goal. But do you think at the end of the day that long-term goal is achieved? Do you think a lot of auto CEOs say, okay, whatever I was going to invest in the U.S., I'm going to increase it because I can't lose the U.S. It's too big, it's too important, it's too lucrative.
Yeah, the reality is the things happen so slowly. So you're an auto CEO.
Yeah.
Don't we wish? They get paid better than us. And you say, okay, I'm going to build a plant in pick state A, B, or C. I mean, that decision is literally a sort of a 5-year capital allocation decision. And
a lot of time and a lot of money.
So NAFTA came in early 90s. At the time, we imported about 30% of the cars that are sold to Americans. 30 years on, we import 50%. It was a 20 percentage point move over 30 years. That's sort of the waves that you're dealing with. So they really are between a rock and a hard place. I think without question, people should not underestimate how much President Trump wants to make more things here. So that is the agenda. And tariffs are his primary tool. And what it means is pain in the interim, but the interim is probably measured in decades. Of course, we'll rebase and profitability will rebase. And we'll drive on after stocks adjust. But it's not an easy process.
Yeah. I mean, if you were an auto CEO, would you also be thinking, all right, if moving this production is going to be multi-year, multi-billion, is the other wrinkle, Al, you would be thinking about, well, this is definitely a priority for Trump, but I don't know what's going to happen in 28. I mean, who knows? Democrats, I got Shapiro or Westmore, maybe they move into the White House. In other words, I could have somebody in the White House who this isn't a priority for them, at least in the same way as it for Trump.
That's another $1 million question, which is one of the reasons that Ford, GM, and Stellantis, old Chrysler, trade for 5 times earnings. They're not exactly hot stocks. But no, you've made, and then your capital allocation decision outstrips this administration. So you really have to believe. Listen, I do think that it makes some sense to make more things here, right? And then we can talk about regionalized supply chains and how do we feel about Canada and Mexico. But it's really tough to a Mexican production worker working in a plant in northern Mexico, $3 an hour. A reasonably tenured UAW worker, we're talking $30 an hour. It's tough to overcome that. Yeah. So even, some of the automaker decisions will be, I'm going to work like heck to get my costs down, but I'm not going to change my footprint. Others will build plants, and then we have to see how it goes.